Good evening, all. It is Sunday night. This is Shay Horowitz, ShogunTrading.com. This is our free weekly newsletter trying to help you decipher this crazy market right now. I talked about the market possibly making a double bottom last weekend if you want to listen to that newsletter. Basically, this is S&P 500. You can see the S&P 500 one bottom right over here and then a second bottom. And that could possibly turn the trend around. But what we have to watch is the 200-day moving average is still coming down. The 50-day moving average is still coming down. The 21-day moving average is still coming down. In other words, we're still in a downtrend. We're in the process of trying to turn it around, but we're still in a downtrend. And there's quite a bit of headwind, quite a bit of resistance right here, and it's going to be a little difficult for us to get up. Is it possible? Absolutely, it is possible. But the market is going to have to do this very, very soon and break above the 1400 and then go up in order for this to really turn around, which, will take some power, of course. What I'm seeing right now, before I get into this, S&P 500, NDX, the NASDAQ 100 basically looks the same, also a double bottom, also coming back. We have to watch out for this one also bouncing over here and coming back up. I'm not sure if it's going to happen. We're going to have to wait and see. I don't predict the market. I trade the market. I look for what's going on with the market, and that's it. We don't make predictions. Dow Jones Industrial Average, basically the same thing. We're also looking for it to turn back around, but we're not exactly sure what's going to happen there. What I'm seeing right now in the market is people are scared. People are afraid of losing their homes. People are afraid of losing their income, their jobs, afraid of relatives losing their jobs, and I'm seeing a serious contraction in our economy. Contraction of, maybe I'm in South Florida, and that's why I'm seeing it more than everybody else, but people that I'm seeing around me are contracting. And that's not a good thing. We're a spenders economy. Our economy is built on people spending money, not on people saving and investing, unfortunately. But, that's our economy. And, we've been doing very well for many years. Maybe we'll continue. So, it's not good. I don't think contraction is good. And what I'm seeing in people, for example, is that the first thing that they cut is of course their extra spending, whatever the discretionary spending, and then they cut the phone bill, and they cut the grocery bill, and they cut the cable bill, and so on. There's two ways of going about a recession. There is I'm going to cut all my expenses. I'm going to play defense, and I am going to contract, and I'm going to be scared, and I'm going to be stressed out. I'm not going to be able to sleep at night. And then the other way of fighting a recession is finding ways to offset your loss of income, offset your loss in real estate, offset your cost at the pump, and actually make money by investing in the right vehicles in order to make extra money so you don't really feel the recession. Yes, the recession is going to be all around us, but if you invest correctly, if you generate the right type of income, the right type of profits out of the stock market, you're doing so much better. Let me give you a simple example. Ryland Homes. Real estate market came down. Sucks. There's a weekly basis. And Ryland Homes is one stock that we shorted. And we went short on this one over here. So while real estate prices came down, and we went, this was our call as well. While the real estate market is going down, you can be short on a stock and make 50% profit on it while the real estate is going down. So you're basically offsetting some of your losses there. We are experiencing that even on a shorter term basis. For example, one of our picks for last week was Hovnanian. It doesn't look like much of a trade, but it went from 1059 up to 1350 in 2 days. In 2 days, 30% profit is pretty decent. And that's something that we're looking at. So my encouragement to you is to find the extra sources of income, diversify yourself, so be more aggressive, and instead of contracting, instead of being scared and hiding in the corner, go out there and make extra money so you're not feeling the contraction. Now, why am I saying contraction? I'm seeing let me go through some ETF, some indexes that you can see what I'm talking about. This is the home builders. This is one that I just talked about. Hovnanian is one that we caught this bounce. We did very well on those few days. But now they're pulling back because they found out that, yeah, there's still plenty of supply out there, and home builders are not ecstatic about the market turning around anytime soon. But I'm still seeing the higher bottoms. So I'm still very hopeful that the home builders will come back up and work well. But we do need for them to turn around soon. Gold. Look at that. I mean, we came up a long way, but then we took a dive and we came up, and now we're diving again. And this could cause gold prices to come down, which is anti-inflationary. XLF, financials, of course, the financials are taking a beating right now. It looks like they're continuing to take a beating. Now, with financials, finance companies, mortgage companies, and so on, one of our picks, for example, for last week was CSE, Capital Source. Short at 1022, all the way down to 936. A very nice 7% day. So that worked pretty well for us. XLE, Energy Spiders, look at that. Look at the head and shoulders. That's a beautiful, perfect head and shoulders. There's your neckline right at 70. If we break that, energy stocks are going to come down. Energy prices are going to come down, which is going to help us out quite a bit. SMH, semiconductors. You can see the semiconductors are forming a wedge over here, and if we break to the upside, that's good. That means that consumer spending is coming back up. But if we break to the downside, watch out, because the semiconductors are a very serious sector that can take down the whole NDX. We actually might trade this one. We might use the 28 level as an entry on the short side, and possibly this 30.33 as an entry on the long side if it turns around. But this is going to be a key level and a key sector to tell you what the market itself is going to do. XLV, healthcare. Healthcare is really getting beat up right now as well, and we're doing pretty well with this one. For example, AGP that we are going short right now. Let me see. That's XLV. I talked about that. DBA, agriculturals. This is another sector that caused quite a bit of an inflation, and look at the pullback right now. Excuse me. To me, it looks like a bubble, and that's what it's turning out to be. Lower tops, lower tops, lower top. Big dive, came back up and coming back down again, which is great news. Metals and mining also coming down and looking pretty good. So this is anti-inflationary. That means inflation is under control. If inflation is under control, the Fed can have more room to react. And finally, oil and gas exploration, that also is making lower tops and looks like it's going to come down pretty well. To summarize all of it, I think inflation looks like it's pulling back, but inflation pulling back could also be a result of consumer spending coming down. Consumer spending can also cause semiconductors to come down. It can cause gold to come down. It can cause oil to come down. It can cause semiconductors. I think I already talked about that, and it could cause the real estate market to keep coming down. Anyway, contraction is our problem right now. The fact that people are not spending money, people are scared. That's our problem right now. Again, my encouragement to you is to invest in order to make the extra income, in order to take care of yourself. Take a proactive approach to this, and not hide in the corner. Anyway, that's it for this week. My plan for this week is to watch the market. I want to see if the market turns around. I want to see if the market is able to maintain this double bottom. If we're able to maintain this double bottom, we're going to go long. In the meantime, while the market is pulling back, we're going short on a short-term basis. There's a few time frames in the market at the same time. Right now, we're on a short-term time frame, going short, having fun on the short side, 2%, 5% per day. Then when it turns around, we're going to go for longer-term trades and go for more profit per trade. Anyway, have a great week, and I'll talk to you next weekend. Take care.